Okay, we're going to get back to the Bank of Canada's interest rate cut because Bank of Canada Governor Tiff Macklem lowered the key interest rate from 2.75% to 2.5% today. It's the first time that the interest rate has been lowered since March earlier this year, down significantly from last year. And it all comes as Canada's inflation rate ticked up in August to 1.9%. So in days like this, we turn to the CBC senior business correspondent, Peter Armstrong, and he joins us there now. So Peter, the first interest rate cut from the Bank of Canada since March. I mean, what does today's decision signal for Canada's economy? It's probably not good.
Yeah, look, I mean, nobody cuts interest rates because the economy is doing great, right? You do it because there's trouble and there's signs of weakness, and there are signs of weakness everywhere. It has been evolving slowly since April, and there was some questions over the summer whether maybe we had seen the worst of the impact of the trade war and the tariffs and the uncertainty, and yet we're still sort of in a position where the job market is incredibly weak. GDP actually contracted through the second quarter of the year, through April, May, and June, and there's not a real sense of what might lift us out of that. So the bank really kind of had to pivot from concerns about inflation still being kind of sticky and a little bit higher than even the Bank of Canada would like, to concerns over growth. And that's why you see the cut. And really interesting messaging, David, about, usually there's some kind of line in there about, if the economy continues to weaken, that the bank will be prepared to lower its key overnight lending rate further. None of that today, because Tiff Macklem really doesn't want to get pinned down on the specifics of when or how he might cut next.
Okay, so, and you can understand why, right? The country's still being hit by the U.S. tariffs. Inflation's up 1.9%. Let's face it, that's not, the catastrophe levels we saw a few years ago, but unemployment over 7%. This is definitely problematic. So how does all of that play into things moving forward?
It creates this really delicate balancing act, because on the one hand, he's got the information we have. He knows where we are. He knows the economic data that have come in so far. But we've got a federal budget coming, and he's going to have to make a decision in October before we see that federal budget. There's the trade issues that change from day to day. That, you've got legal challenges in the United States. You've got the re-beginning of the starting of the maybe whatever's going to happen with CUSMA, USMCA, that seems to be moving forward. And then the whims of Donald Trump. He could remove the exemptions. He could suspend tariffs. You never know what's going to happen. And so what you've really got is a very cautious central bank. Just take a listen to how Tiff Macklem sort of framed a large part of this decision.
Tariffs are weakening the Canadian economy. You can see that very acutely in the directly affected sectors. We are proceeding carefully. We are going to be balancing those risks, and we don't want Canadians to have to worry about big increases in the cost of living.
And, you made the point, David, 1.9%, that's not bad. It's right basically at target of that 1% to 3% range the Bank of Canada likes. But core inflation's a little higher than they'd like. Food inflation's still around 3.4%, 3.5%. It's not all the way tamed. It's not a perfect situation. It never is. And so that's why he's trying to really be cautious.
Yeah, and Peter, we got data from the U.S. today, right? It's not just Canada's inflation. U.S. inflation up in August. Their economy also going in a difficult direction. I mean, what could that mean for us here in Canada?
Well, so two things that it could mean. One, you've got the central banks moving in the same direction, which always makes things easier, right? When the Fed is moving one way and the Bank of Canada is moving another, that can cause some trouble. But it's an interesting sort of moment in time, because I think for the Canadian economy, we started to see the hit of tariffs and the trade war and the uncertainty back in April, and we've been building to this. The U.S. administration to this day says there's never going to be a cost of the tariffs. It's only upside. There's no problem. There's no damage that's going to come as a result of this, in spite of the fact that we're starting to see some data in the United States. The jobs market is incredibly weak. There's some softening in economic growth. There's some real concern, and the sense that these tariffs have only the pain of the tariffs has only been delayed. It hasn't been averted. And if that's the case, then the United States is heading into a 3 or 4 month period where they're going to see an acceleration of that damage and of that pain and of the consequences of those tariffs. And remember, the Bank of Canada is dealing with an overnight rate that was at 2.75, is now at 2.5. the federal funds rate was at 4.25 to 4.5. It's now down to 4 to 4.25. They've got a lot more room to get out of that. They're still in a quite restrictive zone. And so there's probably, we're going to see more movement in both central banks, but it'll be interesting to see how the U.S. Fed continues to manage that message, especially now they have a new member in Stephen Myron, who's the former head of the Council of Economic Advisors to the from Donald Trump. So, the politicization of the Fed is also part and parcel of what's happening in the United States and economic data and how that all sort of plays together.
Yeah, and when those inventory stockpiles start to run out at the start of the new year, look out on what's going to happen there. All right, Peter, always appreciate it. The CBC's Peter Armstrong. Tiff Macklem, the governor of the bank, is warning of considerable economic uncertainty that it still remains.
After remaining resilient to sharply higher U.S. tariffs, global growth is now showing signs of slowing. U.S. consumers are cautious, employment gains have slowed. U.S. inflation has picked up. The Canadian economy is being affected by both U.S. tariffs and the unpredictability of U.S. trade policy. GDP declined 1.6% in the second quarter. Exports to the United States fell sharply. Tariffs are having a profound effect on several key sectors. Business investment contracted in the second quarter. Businesses are also concerned that demand in Canada will weaken as the economic fallout broadens.
Okay, so that's the really gloomy economic backdrop for Prime Minister Mark Carney's first budget, one that the government has said will have a substantial deficit, a statement that prompted this exchange during question period today.
How big is the deficit that the Prime Minister is running?
That budget will contain the biggest investment in this country's future in a generation.
Hear, hear.
Building homes, building new port infrastructure, new trade corridors, new energy infrastructure, building the strongest economy in the G7.
Okay, so how does the federal government account for all of those economic challenges that the country is facing in this budget? That's what we're going to talk about next. Tim, I'm not surprised Pierre Poilievre didn't get a very specific answer because that's going to come on November 4th. But, Tiff Macklem, in his understated way, laid out some real serious challenges, and we heard similar warnings coming from the Fed in the United States today. The continental economy is in rough shape, and that's bad news for the Canadian books.
What's that phrase that guy from Mount Pearl who hosts the national show uses all the time? What did he say?
The arse is out of her? Is it
Oh,
that
well, no,
one?
that's the townie. No, David, we're at an inflection point.
Inflection point.
An inflection point, it is this. Justin Trudeau won in 2015 because he was okay with deficits, and so were Canadians. And we're here in large measure because of the Trudeau government. I think it's fascinating that, and I'm glad to see Pierre speaking about the deficit issue, and the Prime Minister obviously not going to answer it directly. Mm-hmm. Is deficit, our deficits now going to become politically potent because they really haven't been the anchor that you would think they would be on the Liberal government going forward? And you certainly have the spectacle of Mark Carney, the former governor of the Bank of Canada, who had to manage monetary policy when deficits increased, in 2007, 2008, during the great economic crisis. This is going to be absolutely fascinating because I think Pierre is trying to get at the Prime Minister's greatest vulnerability, which is less deficits and more his ability to communicate with people about how they're feeling about their personal economic circumstances. This government has not really been able to convince people that a tariff is a few bucks out of your wallet and makes your life harder, whereas Poilievre has been able to effectively hone in on that. So the deficit debate is fascinating from a policy perspective, but the government's going to have to figure out a way to speak more plainly and authentically to the audience on how they're feeling about not having as much money in their wallet.
Do you think that? Do you think Canadians want empathy from this Prime Minister, or do they want capacity from this Prime Minister? Because
you can have both.
Well, but I wonder about this, right? Because, people do say, he needs to show that he relates to people and connects with people. I don't know if people want that from this guy. I truly don't know. Maybe they do, but I don't know if that's why he was elected in April. Jordan, what do you think?
The Prime Minister doesn't do his own grocery shopping. He's never going to be relatable on the level of household economic issues as an individual. That's not his strength. He was voted in by Canadians because they were looking for capable leadership in the face primarily of the threat from Trump. But the issue that he faces now is that the concerns that are top of minds for Canadians are far more about those household economic issues that Tim was talking about. And I think the biggest challenge that he has is, first, he's got a very difficult communications needle to thread around this budget. He's talking about it as a budget of austerity and investment. That in itself is a really challenging message. And then when you layer on top of that, oh, and by the way, all of these sacrifices for austerity that we're doing are not actually going to tackle the problem with the deficit, it's a pretty muddled message. And the thing is that we know that in these circumstances, there are going to be winners and losers. So he has to be very careful to make sure that it is everyday Canadians that feel themselves coming out in a concrete way as the winners of this. The argument that Canadians need to be sacrificing now for some sort of hypothetical greater gain down the road is simply not going to fly over time.
Right. Okay. Because Benzie, the context around each sort of like big deficit cycle is a bit different. But like the sacrifice now for better stuff over time, Paul Martin, Jean Chrétien. That's what I remember from those days. Yeah. Trudeau started the deficit train again by basically appealing to Canadians' sense that why can't we have nice things? And then COVID blew the debt out of control. So the context on this one, though, is a whole mess of global economic uncertainty and the black swan event of the Trump presidency. So how do you think Canadians view that? I mean, the Conservatives are going at it as reckless spending. How do you think voters are going to look at it?
I mean, Jordan's right. He has a very difficult needle to thread. I mean, he can't really do what Chrétien and Martin did in 1993 and 1994, because remember, a lot of what they did by, in fact, eliminating and balancing the books, eliminating deficit and balancing the books, was by cutting transfer payments to the provinces. And then the provinces, that's where the Mike Harris cuts here in Ontario in 1995, 96, 97. That came from austerity from the federal government, transfer payments being cut, health spending going down. That's not going to fly in 2025, 2026.
And he's already promised not to touch those, right? He's promised not to touch those.
Exactly. He's promised not to touch it. He's going to have his best friend Doug Ford in his grill if he does, and he doesn't want to do that. And certainly the scores of Liberal MPs here in Ontario don't want that either. So I think it's and remember, he's also promised kind of all these unicorn promises like increased defense spending, major projects that are infrastructure projects. There's a whole bunch of things that he's promised to do that just do not fly under the label of austerity. So I'm not really sure how he delivers. And I still think he's going to have some kind of a tax cut or some kind of grabby thing like that he can hang in the window. I mean, we saw in last week in Poilievre's first day in the House, what was Carney touting? He was touting his tax cut from the summer for 22 million Canadians. He likes to talk about those things because remember, he's the progressive conservative liberal prime minister of Canada right now.
Well, I mean, there have been 4 tax cuts: the carbon tax, the digital services tax, the personal income tax, and the capital gains inclusion tax rate increase. And Amanda, on the austerity but investment, to spend less to invest more, the defense spending is like this Keynesian NATO commitment that it's going to help drive industrial policy. So the argument seems to be that the deficits we're running actually create jobs and build things, so it'll be worth it in the long run. Can you sell that?
Can I?
Well, I mean, the vous, not tu.
C'est bon.
Tall PR order. But this is what I think. I think that he has runway on this one. I don't think that he has runway for like years, but I do think that right now, Canadians, sort of like during the COVID time, there's another boogeyman. There's a reason why Trump's tariffs still reign supreme. It's the reason why things are happening. It's the reason why we need to make investments into key sectors. It's the reason why we have to help support those sectors for those who have lost their job. It's the reason why we need tax cuts to put money in people's pockets. It's the reason why we need to diversify, our trade relationships and have more nation building projects. As long as he has that reason why, as long as Canadians believe that there's an external factor, a real external factor that requires us to grow the deficit at that time, I believe he still has some runway to be able to deal with it. If this had been, if Trump wasn't Trump, if the tariffs weren't the tariffs, he couldn't have done it. But in the circumstance that he's in, I think he's bought himself time.
Well, if Trump wasn't Trump and the tariffs weren't the tariffs, it might be Prime Minister Poilievre right now, because that had a big factor on things.
Yeah.
But Tim, he has the external blame factor, obviously, because I think you can look at all of the economic uncertainty and credibly place it at the feet of the President of the United States. I guess the positive promise being offered to Canadians is to use this opportunity and the collective action desire to transform the economy in a way. And can you sell deficits of maybe close to $100 billion if you're building all of these domestic industrial capacities?
Two things on that. I mean, if you look at recent data, when it comes to top issues, Trump in the U.S. is moving down, right? So the appeal of the argument is not as powerful as it was a number of months ago. Now, I'm sure Trump riding around in golden carriages in England may inflame people's anger towards him. The second thing, though, Rob mentioned the Chrétien-Martin budgets. The different time, different public environment, right?
Yep.
The bond raiders were at the door.
Well,
too.
yeah,
It wasn't good.
all of that was true.
Yeah.
But people were more engaged in that. They were of the view that the Mexican peso is going to be more valuable than the dollar. The great line that Mr. Martin had. Does Mark Carney have a reservoir in the Canadian public that's prepared to jump on and energize and be as energetic as they can about sacrifice right now? Are we still burnt and fatigued from COVID and the like? The public mood and the power of Gen Z and millennials right now who have their own individual struggles as opposed to boomers in the 1990s who had general prosperity to say, okay, we can tighten our belts, is very different. That broader macro environment is tougher than it was.
Yeah, my tuition tripled when they were balancing the budget.
It went from 100 to 300.
Well, no, it was when you're making $5 an hour at minimum wage, it was expensive
here comes
times.
the cry.
No, it is much worse for the younger generation right now. There's no question about it. But I wonder if this promise of economic transformation that is sort of central to the Mark Carney value proposition to Canadians, whether that hope that he's offering there, Jordan, whether you think that's enough to sort of carry through whatever needs to happen with the budgets over the next couple of fiscal cycles.
No. Okay. I don't think the promise is enough, to be really frank with you. I think that the challenge that we face is so serious, and particularly with respect to younger Canadians. We're seeing extremely high youth unemployment rates. We're now seeing unemployment start to hit core-aged workers. People and businesses were really holding on through these early months of the tariffs, and now those layoffs are rolling through, and they're going to hit hard. And I think the challenge is right now that younger Canadians aren't just feeling like things are an immediate struggle. They are simply feeling like left out of the promise of whatever we conceive to be the Canadian dream. And that's a more fundamental political problem. And so I think the challenge for the Prime Minister is that while he's articulating a new economic vision, and the Major Projects Office is a big part of that, reorientation of trade towards other markets is a big part of that, and that's all well and good, but those are all very long-term projects. And what he needs to be able to do is demonstrate something that people can touch in the near future, and that's his challenge going into this budget.
Okay, very good points there. Benzi, I was of the view when the Prime Minister won the election, two big cleavages he would have to deal with. Regional ones, the geographic ones with Western Canada on the prairies in particular, and the generational one. Scott Moe and Daniel Smith are very much in the tent right now and very much on board, for now. The generational one is going to be a whole lot more challenging, right? Because, we talked to Gregor Robertson earlier in the show. They're doing lots of things on non-market housing, affordable housing, but the market stuff, especially where you are right now, that's a whole other tough nut to crack. And that's the one young Canadians in particular are going to judge them on.
Yeah, and as Jordan said, there's no easy quick fix for these problems. Housing starts here in Ontario. You talked about it earlier with Scott Aitchison and with Gregor Robertson, David. Housing starts here in this province are literally half of what they need to be for Ontario to meet its housing targets to build 1.5 million new homes by 2031. That's not going to happen. So that means there's a whole bunch of people watching right now who have their adult kids living in their basement, and they're not super thrilled about it. I guarantee it, because I won't be if my kids move back in the house. Sorry guys if you're watching, but and that's something that's happening across the country. So these are very, very difficult challenges for Mr. Carney, and he has really promised the moon in many ways, and he's a good salesman. I give him that. I mean, for a guy who literally was not in politics 10 months ago, he's done remarkably well, but he's made a lot of promises. Now it's time to start delivering on some of those promises, and on some of those things you can't just do it on November 4th with the budget. You're going to have it's going to take many, many years.
Well, I would say you're right. It is a significant challenge for Prime Minister Carney, but we should also add for Premier Doug Ford, Mayor Olivia Chow, and all of the councillors in Toronto, because we do have other levels of government in this country, and they have most of the levers on this one in particular. So just a reminder to people at home.